Welcome to Slackin' Off with Brady Slack.
Welcome to another episode of Slackin' Off. I'm your host, Brady Slack. Today is going to be one of those episodes that might not be very fun, but it is extremely important. In 2021, there was a bipartisan bill called the Corporate Transparency Act that was passed. And up until 3 months ago, there was very little attention that was put to this Corporate Transparency Act. Um, Admittedly, it was not something that we put much attention to, only because I think during the course of the past 4 years, there have been so many updates to tax law and a major tax overhaul with the Tax Cuts and Jobs Act. And this was one of those things that was maybe just slipped in right under the radar and not given much attention to. But even though this might not be a super fun podcast to listen to, you're not going to know or learn how to make millions of dollars through this podcast or processes and systems you can implement into your business to increase profitability. This is something that could come back to bite you if you do not pay attention. And by bite you, I mean if you don't do some of these things that we're going to talk about, we're talking very large fines, potential jail time that has been talked about, for some simple reporting. We're also going to talk about maybe some ideas or some thoughts that are going to take place moving forward, with different reporting requirements that have been proposed, and some advice that we've been trained on, or that has been discussed in different seminars that I've attended over the course of the last couple months, and trying to give you guys a leg up on the situation. I'm going to be honest. I also on the screen have the Corporate Transparency Act pulled up. I've got the facts page. I'm going to try to be very technical with this. I'm going to try and not miss anything. However, to kind of preface our conversation today, to preface this podcast, if you have questions about the Corporate Transparency Act, if you have questions about whether or not you are going to be required to file a report under the Corporate Transparency Act, or what information needs to be filed, I highly recommend that you go to fincen.gov, fincen.gov. Do not go to TikTok. Do not go to Instagram. Do not go to Google. Go to fincen.gov to acquire the information you need. There's a really simple facts page online, and it's got some really good diagrams about who needs to file a report and what does that report need to contain. And there's a lot of false information about the Corporate Transparency Act that I found online. Part of that financial porn aspect, if you will. So what is the Corporate Transparency Act? Well, the Corporate Transparency Act was a bipartisan bill, like I said, that was passed in 2021 that kind of increased efforts to discourage or discover, might I add, illicit activities, tax fraud, from individuals that might be utilizing shell companies, shelter tax structures to avoid taxes or perform illicit activities. I'm going to be honest, this is my opinion, but I think this is kind of like, hey, you've got to pay taxes on transactions in Venmo of $600 or more. I think it is just something more that the government is trying to do to control what goes on, or at least understand what's going on and reduce the amount of potential tax fraud or illicit activities that are going on. The Corporate Transparency Act requires most, I won't say all, but most registered businesses that are either doing business in the United States or are registered within a jurisdiction in the United States to file a quote unquote benefactor report. Now, this report is more or less going to contain information relating to the business, such as tax information like the legal name, the legal entity structure, the EIN number, the address or the registered address for the business, contact information. And then it's also going to require that certain individuals involved with the business, referred to as a benefactor in the Corporate Transparency Act, that their information also be registered with FinCEN, the Department of the Treasury, administered by FinCEN, for reporting requirements. Again, their information might include names, addresses, contact information, might include ownership percentages, and again, reason being is they want to know who owns the businesses, um, how many people are involved in the business, and they want to discourage tax fraud and illicit activities. Um, Now, it's important to understand that there are some exempt entities from filing. There are some people who are not going to need to file a report with FinCEN for the Corporate Transparency Act. Um, there's not going to be a fee for submitting a beneficial ownership information report to FinCEN. Um, and the reporting, so far as I understand it, this has been discussed in a few different trainings that we've had, but so far as I understand it, this report will only be available to certain government agencies such as the Department of the Treasury, the IRS, okay, um, and certain local and local and federal government agencies such as maybe the FBI or the CIA or uh, local law enforcement. Okay. Um, Now, some of the concerns that have come up in some of the discussions that we've had is, hey, I've registered businesses in maybe certain jurisdictions like New Mexico, Nevada, Wyoming for anonymity purposes. Supposedly, I, it's hard to say at this point. It really is. Supposedly, that anonymity protection that you've elected to utilize through certain jurisdictions should still be maintained. Um, Again, this beneficial ownership information report is only going to be filed with FinCEN and given to those certain select government agencies. Now, what we've kind of discussed what needs to be filed, why it needs to be filed, what the purpose of this is. It's important to understand timeframes. So any business that is registered before January 1st of 2024 has until December 31st of 2025 to file this report. They've got 12 months. They've got 365 days from January 1st of 2024 to file this report. All reports can be filed through fincen.gov. Again, FinCEN is the administrator for these reports. And all of those reports can be filed online. I'm assuming, I actually haven't looked at the report, uh, the submission tool, but I'm assuming it's probably going to be similar to registering your own business and submitting that ownership information on any state's website when you register a business, or if you go and try and get an EIN number. Okay. But any business that's registered before January 1st of 2024 has the entire year of 2024 to file this report. Now, here's the catch. Any business that receives its recognition of registration on or after January 1st of 2024 has 30 days from the date that their business was recognized as being registered to file this same report. So, I've already been in some phone calls where clients have expressed interest in starting a business, entering into a partnership, acquiring a real estate activity, and my recommendation thus far has been, if you are going to be doing that activity before the end of the year, register the business now because it gives you a little bit more time to file this report. If at any point after January 1st of 2024 there are changes to any of the required information, contact information for the business, addresses, a change in ownership due to an acquisition or a merger or a sale, um, you have 30 days from the date of that change to update your report with FinCEN. Okay. There has been some discussions, and I won't put any weight into it. I'm just simply telling you because there might be updates here. This is being filmed the day before Thanksgiving, November 22nd. It will be released in December. There are talks that there might be some extensions to some of these timeframes. 30 days is pretty quick. I've heard them tossing around a 60-day time frame or a 90-day time frame. Um, who knows? But as of right now, you have 30 days to file those reports or update the filed report if it's already been filed. Um, Now, here's kind of some nuances that we've discussed. There are some things that we have not yet received a ton of guidance on. So take them for what it's worth. But one of the major conversations is who can file this report. Now, please be understanding and know that if you own a business, you can hop on and file this report. It's free. Honestly, should probably not take a lot of time, but there might be some information that you need, such as addresses, EINs, socials, still kind of TBD there. But anyone can get on and file this report. Now, the AICPA, and this is more so for those listening who are maybe not our clients or who are other advisors in this space, the AICPA issued an article on the Corporate Transparency Act a couple weeks ago, and it outlined some issues, some legal issues with this beneficial ownership report that needs to be filed, and states that uh, uh, accountants, CPAs, enrolled agents who file this report for their clients might be participating in the unauthorized practice of law. They also stated that this is not considered an accounting advisory role, but more of a legal role, and that it could potentially uh, waive your rights with errors and omissions insurance. It also said that each individual state should make the determination on whether an accountant can file these reports for their clients. In one of the trainings that I was in, there was an attorney who was giving a presentation on this Corporate Transparency Act that kind of suggested this could be an issue. Now, from my own personal experience to this point, I can assure you that very few, if any, states actually have or will provide any guidance on this. We have reached out to a couple different states where we have clients and requested that they provide us with some guidance, and they have not. We have reached out to our insurance company trying to figure out to the point of is this going to conflict with what we can offer in our errors and omissions insurance, and they do not have an answer for us. When I say that this, even though this was passed in 2021, but very few people have any insight into it, very few people have any insight into it. People at our insurance company didn't even know what the Corporate Transparency Act was. The state of Utah, the state tax commission here in Utah, the lady had no idea what I was even talking about. That they had to escalate it to their research team to determine and help give us some answers. So there will be some developments. I could be wrong. I don't think I will be, but I could be wrong in saying that there will be lots of companies who pop up and charge you a fee to process this Transparency Act. And I would be very, very, very weary of any company that is trying to file this beneficial ownership report for you, because there is a lot of sensitive information in that report. And again, you can file it for free online. Now, that being said, if we find that we have the availability or the ability legally to offer this as an accounting advisory, this is something that we will be doing for our accounting and our advisory clients. We will most likely charge a fee for clients who file tax returns or who are not clients that need us to help them file this report for, only because it does take time. Time is money. But if we can do this, this is something that we will file. We'll collect that information, which we should already really have on hand for our clients, so that we can file that information. Now, um, kind of again going back to some of these other ideas, some of the things that are going to be covered or that you need to understand is who does need to file a report, what information does need to be listed on this beneficial owner, or who is defined as a beneficial owner. So a beneficial owner is an individual who either directly or indirectly exercises substantial control or owns at least 25% of ownership in the business. Okay. And like I said, their information is going to need to be filed on that report. Substantial control is someone who might be in a C-suite position, CEO, COO, or providing a similar function, a managing member, someone who has authority to remove or appoint officers. They make decisions. They have involvement, or the IRS would refer to that as material participation. Those are a couple of things that need to be clearly identified. In ownership interest is someone who might have rights to shares of stock, voting rights, or other mechanisms used to establish ownership. Um, and there are people who might qualify for exemptions. Um, now, again, there's quite a different list as far as what entity might qualify for an exemption. I know some examples might be a bank or a venture capital, um, maybe some of those ideas, 501c3s in some instances, but those are some exemptions. Um, some of the other information that I think is important to understand is what who does need to qualify. Now they have a little flow chart, and it basically says, okay, great. If your reporting company was registered on or after January 1st of 2024, if the answer is yes, then identify the individual who directly first filed for the creation of that business. Okay, great. Then that individual needs to be listed on there. So there's a couple things to keep in mind there. Um, in that they've also identified that an accountant or a lawyer could be the applicant for that company depending on their role in the filing of the documents. So again, if an accountant or an attorney has helped you create your businesses, there's room to argue that that individual or should be able to help you fill out this beneficial ownership report. um, some things to also take into consideration that I think are important are this report is going to be required for most, again I say most because there are some exemptions, but most businesses that are registered or have been registered or are maybe defunct um, in the United States. This causes a huge issue because I know of some clients that have a few businesses that they started maybe even 5-10 years ago, and they haven't done anything with, but they never dissolved the company, and it's just they just let it go. They let it lapse. They never renewed it. Supposedly, those companies are still going to be required to file a beneficial report. There's a couple individuals at one of the conferences that I was at saying, hey, we've got some clients who, through transacting real estate, probably have upwards of 20, 25, 30 different LLCs that they just aren't utilizing anymore because they've either sold those assets off or they've transferred those assets to a different LLC. To this point, it is extremely important that you as a business owner are organized. Okay. It's extremely important that you as a business owner know what businesses you have, what businesses you have had, what businesses you need to report on. Because there would be a very easy way for the, Department of Treasury to review business returns that have been filed, EINs that have not been utilized in a couple years, but that don't end up on a FinCEN report. And now you get issued a penalty and a fee, potential jail time, because you haven't filed a report for that business, only because you had no idea that that business was even, registered or hadn't been dissolved 10 years ago. So I would strongly recommend that you take the time over the course of the next couple months to identify what businesses you have had, what ownership you have had in those businesses, and determine whether or not a report needs to be filed for that business, or that business just needs to make sure that it's dissolved. Okay. Another area of concern that was discussed. Now, please understand that this is a little bit more speculative. Um, I am I'm kind of delivering this information secondhand, not really secondhand. That was information that we received, but the execution on this conversation really needs to come down to what your advisor is going to advise you to do, both your tax accountant and your attorney. Okay, I'll tell you maybe the stance that I will potentially take with our clients who this might affect, but again, ultimately, this needs to be between you and your advisor. Um, there are so that this obviously this Corporate Transparency Act is a federal reporting requirement. None of this information should be reported to any state entities, besides, again, like I said, local government like a police force, in the event that they needed it. But there are some states, New York, I believe Connecticut was one. I believe there was one or two in the Midwest, Minnesota, Illinois, that have also proposed recent legislature in the states to require certain reporting requirements, much like the Corporate Transparency Act. Now, again, like I mentioned, the idea of the Corporate Transparency Act is that this information is going to maintain identity integrity. That it should not be made public information. However, that is not so much the case with some of these states and the proposed legislation in those states. For example, the conversation that was had, what was instructed to us was that California, or excuse me, New York, for example, is one state that has proposed legislation to require certain reporting, but that the reporting that is given will become public information. And now the thing to realize when you register a business, a lot of that information is already public information, unless you have states like Wyoming, for example, that have really good um, identity protection clauses with their business registrations. But this poses a problem. If I own a business in New York and I'm going to be required to file a report, and that report is going to be made public information about my business and the owners of this business, do I want the general public to know who owns this business and the contact information for this business? I would argue no. The thing that I would suggest or recommend that you consider is what if the filing fee is free, what is the potential penalty? For some of them might be a couple $100 a year for not filing it, $250. Would it be worth it to pay the fee so that my information is not made public and just live with paying the fee? That was kind of the conversation that was had. Again, I highly recommend that you converse with your advisor on that, get some insight when that legislation starts to get pushed through. um, but that is definitely something to consider, based on whatever those fees are and what the reporting requirements are. That being said, there's some additional information about some documentation and some identification factors that are provided when you register for this FinCEN report. Um, that being said, again, this is something that has not been given much attention up until the last 2 or 3 months, and then all of a sudden something goes into effect, and all the finance gurus and the financial influencers pop on this. I'm not saying I'm not one of them, but th- I highly recommend that you converse with your advisor, whether that is a legal advisor or a tax advisor, to determine what information needs to be filed for your particular business or businesses, and make sure that that information gets done sooner rather than later. This is not something that I would wait until the last minute to file. I would try and get this done sometime at or around first or second quarter of 2024. Just get it done and over with. It's a free report. You can go on to fincen.gov, again, fincen, fincen.gov, to file these reports. And this is called the Corporate Transparency Act. Um, Truthfully, I really hope that, again, like I said, this wasn't an episode where you're going to learn to make $1 million. This wasn't an episode where you're going to learn some cool, unique strategy that's going to help you save a ton of money on taxes. But it's one of those things that can be a needle in in the behind if you don't do it, a thorn in the side, but it is something that you do have to be aware of. It's something that you do need to take seriously. It is something that you do need to consider and make sure you do properly and maintain. If there are any questions, please reach out to our firm. We're happy to help. We're happy to provide some guidance. The easiest way to do that is either go to my Instagram and schedule a call or email us at info at highcountryfinance.com. If you liked the episode, give us a thumbs up. If you didn't, still give us a thumbs up, but tell us what we can do better. Um, if you have any people that you'd like to have on the show, let us know. Comment me, DM me, and we'd be happy to make that happen. Otherwise, again, thanks for listening. It'll already be past, but tomorrow's Thanksgiving, so I hope you had a good Thanksgiving, and we're entering into a good holiday season. So it's a wonderful time of year. Again, thank you. This was another episode of Slackin' Off. Keep slacking off.
Thanks for tuning in to Slackin' Off with Brady Slack.